How's it going, guys? So today we're going to talk about MACD. So if you have not heard of this indicator before, or maybe in the past you've been confused by it, then I'll teach you the basics of it, okay? And hopefully by the end of this video you'll be able to use this strategy to help you increase your profits in trading. Right, so let's get to it right now, okay? So basically, what is MACD? MACD is a short form for moving average convergence, divergence. Now, what does it mean by convergence and divergence? Later on, I'm going to share with you what is it. Basically, if you are confused of the grammar, look at the first part, moving average. Alright, MACD involves the use of moving average. Okay, just keep this in mind first. So what is convergence? Convergence really means that when things are coming together, that's when it is converging. When things are going apart, then it is called diverging. And MACD is actually a type of momentum oscillator. So there are many types of oscillators out there that you can use, but MACD is one of the more unique ones because some people say that MACD is a leading indicator, some people say that it's a lagging indicator, and because of that you can use it for many different purposes. You can use it differently, you can use it on different time frames. And basically what an oscillator does is that it measures the changes in market momentum. What it means is that it measures the change in the sentiment of the market. Is the market going bullish to bearish, or is it going from bearish to bullish? So in a way it tells you the change in the speed and also the strength of the trend. Is the trend going to run out of momentum and then retrace, or is the trend going to have enough momentum for it to continue its trend? And even if it does continue with its bullish trend, how fast will it go? This is what MACD is going to tell you. So in other words, to put it simply, it tells you, is the bullish trend going to keep going, or is it going to reverse soon? So when it's going to reverse soon, you better get out, you better take profit. Okay, so it also tells you when the market is going to change direction. When is it going to reverse? In other words, it gives you a sort of like a reversal signal. Later when I show you some charts and you know why, because I know some of you be like, what? And like I said just now, it also helps you detect the end of the trend. Basically, when is the momentum going to run out so that you can get out before the trend ends and before the trend reverses. So like I said just now, it's a combination of leading and lagging indicator. Now if you're still not sure what's a leading and lagging indicator, I have two choices for you. Number one, go back and watch my basic videos. Number two, you need to improve on your English, seriously. Basically what a leading indicator is that it moves before the price moves, which means that in a way you can use it to enter the market. What's a lagging indicator? To put it simply, it moves only after the price has moved. So if all you use is lagging indicator for your trading, by the time the price has moved and then you got the signal from indicator which is lagging, then it's already too late. So this is what I mean by leading and lagging indicator. So how do you insert MACD into your platform? So if you go to your MetaTrader 4 platform, what you need to do is to, hold on a second, go to the insert and then go to indicators. Then you need to go to oscillators. Then when you click on MACD, then you see this window at the bottom right here. So this is your MACD. Now I know you may be confused. What's this line all about? What's this vertical line all about? Don't worry, later I'm going to share with you what are all these things, okay? But first thing first, make sure you don't insert the wrong indicator, okay? Okay, so let me just pull out my chart over here. So if you go to your platform and you go to MACD, make sure you key in the right number. So this is the default number. The fast EMA we put as 12, slow EMA as 26. For the signal line we're gonna put as 9, okay? Then click on OK, then this is what you get. Personally, I don't use MT4 as much to rely on MACD because I prefer to use thing called swim, but that's just my choice, okay? You can use MT4 if you want. So what are all these things all about? Let's just go one by one, okay? You just need to think of MACD as comprising of 4 things. How many things? 4 things. Repeat after me, how many things? 4 things, okay? I gotta stop this, man, seriously. Okay, so what's the first thing when it comes to MACD? It's like I said, the vertical bar chart over here. Now this image I've taken from my trading platform, which is Thinkorswim. I use that for stocks too, but I also use Bloomberg for stocks. I just like Thinkorswim because I just like the interface a lot. But if you prefer to use MD4, then feel free to use it. You can see two shades of color over here. The first one is the light green color, and then the second one is the dark green color. So this is the settings that I put in. You can have all of them the same color if you want to, but for me I just want it to have two colors. The light green area here tells you that the histogram is going upwards, alright? And when it starts to turn dark green, it means that the histogram is going downwards. So what does this mean, going upwards and going downwards? Later on I'm going to share with you in detail. Don't worry about that, alright? And also same thing when the histogram is below this line over here. You see two shades of red. I'm so sorry if you're colorblind. I'm so sorry, I forgot about that. So you can see that over here, if you can really look into it, if you're watching this on TV, you might want to use a magnifying glass. So you see the light red shade over here, it means that the price is going downwards. And then you see a dark red shade over here, it means the price is going upwards. I mean the histogram is going upwards, not the price. When you don't have enough sleep. Okay, so let me just remove all these, don't make it too cluttered. So just for now, understand that this vertical bar is called histogram, okay? That's the first component. Then the second component, right now I need you to just focus on this blue line, okay? Don't pay attention to the red line, we go one by one. What's this blue line all about? This blue line is your MACD line. With that said, not everybody uses blue color, it's just me, alright? Doesn't mean that if it's blue, then it's MACD line. So this is the second component, the MACD line. And then the third component, of course, is this red line right here. What's this red line all about? It is your signal line, or some people call it a trigger line. Why is it called trigger line, signal line? Later on, I'm going to share with you why. And of course, that's the fourth component of MACD. And what is that? You see this purple line right here? Okay, this is your zero line or your center line. So as you can see, because the histogram oscillates below and also above, and also for the MACD line and signal line, it oscillates below the center line and then goes above the center line, right? That's why some people call MACD a centered oscillator, alright? A centered oscillator, okay? So again, a little bit of recap, four things, okay? The vertical bar chart, which is the histogram, the blue line, which is your MACD line, the red line, which is your signal line, and then the middle line, which is your zero or center line. So first thing first, let me just go through what's the MACD line all about. Like I said, the MACD line over here, in this case, wait a second, is your blue line, alright, your blue line. So let's just focus on this blue line. So what's this blue line all about? If you take your 12 EMA minus your 26 EMA, you would get this blue line right here, okay? If you put in your 12 EMA, right, which is right here, and then if I go on to add a 26 EMA, then this is what you get. Let me just make this thicker a little bit. Okay, so if you take the 12 EMA minus the 26 EMA right here, then you get your MACD line, which is your blue line right here. Alright, please don't confuse these two lines with these two lines. Like I said, this is your 12 EMA, whereas this is your 26 EMA. Minus this two, then you get your MACD line. So if you want to do that on MT4, it's the same thing. Okay, so right now this is the 12 EMA minus this line, which is your 26 EMA, and this will give you your MACD line. So of course in MT4, this line that you see right here is not the MACD line. This line, okay, let me just, alright, this line is actually your signal line, right? So don't confuse this with the MACD line. Now how do you differentiate it properly? If you go back to my Thinkorswim platform, you'll see that MACD line, it is a lot more choppy, right? It's a lot more volatile. Whereas if you look at signal line, it is a lot more smooth, right? So if you go to MT4, you see it's a lot more smooth as compared to MACD line. Okay, so this is how MACD line is calculated. And as you already know, moving average is a lagging indicator. So hence, your MACD line in itself, it is still a lagging indicator. Okay, because we are calculating this number based on two lagging indicators, which is the 12 and 26 EMA. So MACD line, you can also call it a difference line, because you're taking a difference of these two EMA. It tells you whether the market is going uptrend, downtrend, or is it going sideways or consolidating. Okay, so that's the MACD line, and then right now we still have another line, which is your signal line, okay, which is this red line over here. So what's the signal line all about? So some people call it signal line, some people call it trigger line. But basically a signal line is the 9 EMA of the MACD line. So what do I mean by that? Your MACD line is, remember, this blue line right here. So essentially what you're doing is, you're just taking the 9 exponential moving average of this blue line for you to form your signal line, which is your red line. So what you see is that you get a line that's a lot smoother as compared to the MACD line. So in other words, it gives you a more accurate line as compared to your MACD line. And there's a lot of debate on whether this is a lagging indicator or leading indicator. Some people say it's lagging, some people say it's leading. I would say it's a little bit more towards leading indicator, even though it's taking the 9 EMA of two lagging indicators. You know what I'm saying? So what the trigger line does for you is that it produces trading signals. How does it give you trading signals? Later on, I'm going to share with you a couple of ways that you can use the MACD and also the signal line together. So right now, the third thing that you need to take note of is of course your histogram. Okay, so what is this vertical bars all about? Okay, the histogram is, how is it calculated? It is derived by taking your blue line, which is your MACD line, minus your red line, which is your signal line, or your 9 EMA. Alright. So in other words, your histogram is like a derivative of MACD. One thing you need to take note of is the different height of the histogram, alright? Some bars you see that they are a lot taller, right? Some bars you see they're a lot smaller. So what does this mean? The taller the bars are, the stronger the trend would be. In other words, the trend is increasing in strength, and when the bars are smaller, it means that the strength is low, okay? So one thing you need to take note of, let me just rub this off, is that you see that there's a crossover over here. Once the MACD line and the signal line crosses, most of the time it would separate from each other, it would diverge. Okay, so in this case, you see the gap in between the MACD line and signal line increasing. Okay, so what does this mean? When the MAs diverge from each other, it means that the strength is getting stronger. The strength of the trend is getting stronger. And when the MAs diverge, you see that the histogram bar gets taller. Okay, so you see right here. So see right here, the gaps are widest over here. The bar is also the tallest over here. And the other thing is that you need to take note of another thing, okay? It means that when the MACD line and the signal line converge, for example over here, the histogram would be at 0. Because your histogram, like I said, is the difference between your MACD line and signal line. So when they are the same value, let's say you have -1 minus -1, that will be 0. Okay? So when you see the MACD line diverge, it's called divergence. And when you see the MAs converge together, this is what we call convergence. Okay? Meaning the smaller the gap in between MACD line and signal line, the smaller would be the histogram bar B. Then the wider the gap between MACD line and signal line, then the taller the histogram bar would be. Okay? The wider the gap, alright, then the taller would be your histogram. And vice versa. The narrower the gap, then the shorter your histogram would be. And the other thing you need to take note of regarding the histogram is, like I mentioned just now, the different colors. I'm so sorry if you're colorblind. I'm really sorry because I didn't think of it. Over here you actually see light green color, correct? And over here you see darker green shade. Over here you see lighter red color. Over here you see darker red. And let me just change the color, okay? So that's easier for you. Negative up, let me just put it as, let's not use red and green, okay? Blue. Negative down, let me just take it as purple. Positive and down, let me just use, what colors do you guys like? How about yellow? And positive up, I'm gonna put it as, let's just use light blue. Okay, is that better? The bullish bars, which is on top of center line, is light blue. The bearish bars on top of center line is yellow. You see that? Okay, let me just give you a better example if I can find one. Okay, so when the bars turn from light green to yellow, this is a bearish signal. Okay, and when the bars turn from purple to blue color, this is a bullish signal. But of course, you cannot just rely on this to enter and exit, because here's the thing, MACD indicator is just a confirmation indicator, meaning that you need to use it alongside with other indicators. If you watched my previous video, you know that you cannot rely on just one indicator for you to buy sell. You cannot rely on just one factor for you to buy sell. That's like stupid. If you watched my video already and you're still doing the same mistake, let me just tell you, just stop trading. Okay, just stop trading. Because you can see that sometimes when the blue turns yellow, it's a bearish signal. The price goes down only slightly and then it continues to range and go bullish. But in some cases, you see the signal play out. You see, from blue, light blue to yellow, straight away the price retraces. Okay, and partly also because you see a spinning top over here, candlestick. Let me find you a better one. Okay, from purple to blue, you see, right away the price retraces. You see, it goes back up. And when it comes to this point, light blue turns yellow, straight away the price retraces. Another one, purple to blue, straight away you see the price retraces upwards. This is a bullish signal. Another example, over here, from blue to yellow, okay, straight away the price retraces downwards. From purple to blue, the price lags a little bit, ranges a little bit before it goes bullish. Alright. So one thing you need to take note of is also, don't confuse MACD line, signal line with histogram, okay? Just now when I said when MACD line crosses signal line, histogram would be 0, okay? But if your 12 EMA crosses 26 EMA, your MACD line would be 0. Okay, Let me just show you, zoom in and show you. Let's just find the crossover, okay? So you see, right here, your 12 EMA crosses your 26 EMA right here. Let me just put my cursor over here. Do you see that our MACD line is at 0? Correct? If I put my cursor here, MACD line, which is this blue line, is at 0 when the 12 EMA crosses 26 EMA. Alright, so don't confuse these two things. If I may write down for you, if MACD crosses signal, then your histogram would be, I hate writing with this, 0, okay? Whereas if your 12 EMA crosses 26 EMA, then your MACD, your MACD would be 0. Right? Whenever I talk about MACD, I always think about McDonald's. So when you want to eat McDonald's but you can't, that's life. That's my life, guys. So when do you use MACD? One thing you take note is that, like I said, you don't use MACD alone to determine your entry and exit point, because most of the time MACD just tells you whether the trend is going to continue, whether it's going to reverse, but it doesn't really give you the exact point to enter, exit, where to TP, where to cut your losses. When you eat McDonald's, you need to eat, don't just order the burger, you order the french fry, you must order the Coke, otherwise eating the burger doesn't feel like eating McDonald's. You know what I'm saying? So use it alongside with other confirmation indicators. You want to use your volume indicator, you want to use candlesticks, combine it with moving average. Now here's the thing, there's also no perfect indicator in this world, so it doesn't mean that you have to use MACD, otherwise you'll die. Different traders use different type of indicators that suits them. If you feel that MACD is not useful for you, then don't use it. If you feel that it helps you increase your profitability, then keep using it. In fact, I know some people who don't even use any indicators. They just trade with price action. They just rely on fundamentals. So there's no like a holy grail indicator, just like how there's no perfect burger in this world. And because MACD is used to help you determine the market momentum, okay? Momentum is super important, especially if you're a long-term trader. If you're a scalper, like screw momentum. Like who scalper just trade NFP and then they get killed and then they be like, oh my god, Karen, why did I lose so much money? You know what? You know, if it works for you, just keep doing it, man. I'm not trying to like preach a certain indicator to you. Like I said, momentum is very important if you're a long-term trader. So that's why a lot of trend followers, they'll use this as their trend indicator. Okay. If you're wondering whether you can use MACD on other markets, yes, you can. You can use it for your stocks, for futures, for commodities, and also Bitcoin. So there are a couple of ways that you can interpret MACD. You don't have to pick all of them. You can pick one that suits you, that you're most comfortable with. I'm just going to share with you what are some of the options that you can pick from, okay?